something is happening in Guelph and Milton that almost nobody is catching, and these markets are moving differently. In fact, a lot of people like to compare Guelph and Milton simply because of its proximity. In today's video, I want to touch on something that a lot of people are actually missing when they make this comparison. And when you read a headline or something that says no one is buying in Guelph or Milton, I want to set the record straight as to what's actually happening in these markets. And some of it might surprise you, or some of it might be, hey, I knew that already. But we can agree by the end of this video that both these markets are completely different. And if you're a buyer who's looking to make a purchase, or a seller that's kind of sitting on the sidelines, unsure of what to even do at this point, you're going to need to understand this difference, because the opportunity may not be where you think it is. If you and I have never met before, I'm Varsha, and I help families make housing decisions based on data. Over 90% of you aren't even subscribed to this channel, and that hurts me. And if it's in you and you enjoy getting this style and format of video, would you do me a favor and subscribe? It would mean the world to me. Moving on, let me just give you top line where these markets are sitting. In Guelph, there were 73 sales in February 2026. Okay, that's down 25% from 2025. So yes, less money circulating. And we are trending at about 3.7 sales per day in Guelph. That's the lowest February pace in years. In Milton, sales are down 29%. Okay, in Guelph, sales are down 25%. In Milton, sales are down 29% for the month of Feb 2026. Active listings are sitting at 490, and that's the highest in terms of active listings for Milton in over a decade. And you likely know this because you're looking around, you're seeing more signs, you're seeing inventory. Inventory is up. That is the story. The months of inventory in Milton is sitting at 5, and the average days to sell is sitting at 29. Okay, that's the average days it takes for a property to sell in this market. And again, that is not a one-size-fits-all response, and you're going to find out why. There are certain property types that it is competitive, and they are going, in fact, faster than 29 days on market, while others might be sitting for 60, 80, even 120 days. So on the surface, these two markets seem quite similar, and I can speak from confidence about both markets because I have physically lived in both markets and transacted in both markets. In Guelph specifically, the slowdown is not too much about inventory, at least not in every segment. Remember, we know that there are different segments in the market. There's different product and property types. 403 active listings at the time of recording this video, 4.3 months of inventory overall. That is technically balanced, although it is leaning a little bit towards buyer. Now let's look at the composition of those 403 active listings. 180 of those are in our detached segment, so single family detached homes. 223 of those are condos and townhouses. The detached segment in Guelph is not drowning in inventory. In fact, it's a little tight there. It's getting competitive, and it has been for the last month. It is the condo side that is sitting. And side note, here's something I want you to know. 42% of the condos that are on the market are actually vacant, empty units. Nobody lives there. That means those owners, investors are holding carrying costs on empty properties. In Milton, the story is broader. There isn't one segment that's kind of dragging the stats down here, as it is in Guelph. Every category has more inventory than it has seen in a decade. Okay, now let's ask the question that a lot of clients are asking. Why are buyers not buying? If I were to break it down, I see three clear forces here at play. There's likely more, but these are the three that are top of mind that I want to share with you. Force number one is the interest rate uncertainty. Yes, the Bank of Canada on March 18th just announced a hold in terms of the interest rate. And most major economists and Bay Street, they're all telling us that this is likely going to be the story for much of 2026. Now, wouldn't you think that stable rates would actually activate buyers to say, hey, the rates seem stable, and this might be a good time for me to enter the market because there isn't too much change. There isn't a lot of uncertainty in the rate department. What I'm seeing on the ground and in conversation is actually the opposite. Buyers are frozen not because they think it's going to go up. Buyers are frozen because they think the rates are going to go down even further. They just don't know. Is it going to go down lower? And that keeps them stuck. They are waiting for a signal. And meanwhile, every month they wait, they're either paying rent or living a life that really doesn't suit them, or watching inventory rise in the wrong product types, in the wrong segments. The irony is, and I do say this, understanding that it's different for different people, the rate environment is actually not bad. It is dramatically better than where we were at in 2023, But buyers who are anchored in that thought that, hey, rates could drop even further, they're not factoring in the cost of just sitting, of that stagnation, of waiting. We actually covered this in my previous video where I did the math, why people aren't buying. And in that video, you're going to find there's a good breakdown of 2 scenarios with the cost of waiting. So I encourage you to go check it out. Okay, moving on to force number 2. I see it as tariff uncertainty, but really it's coupled with job uncertainty. If we're talking about our specific markets in Guelph and Milton, and they play out differently because Guelph and Milton have different business concerns and different pockets of job uncertainty that plays there. So Guelph's economy has significant exposure when it comes to manufacturing. We have Linamar, auto parts suppliers, food processing. Milton and broader Halton region is similar exposure through logistics and that Highway 401 corridor, which is crucial. When people feel uncertain about their job or their income trajectory, they do not make the biggest purchase of their lives. That hesitation shows up in lower sales volume, even when mortgage rates seem reasonable. And finally, force number 3, and I think this is deeply underrated, it is the psychology gap. If you're looking at the housing market and you're not factoring this in, you are missing a big element of what's driving decisions in today's market. Buyers are comparing today's pricing to that peak in 2022 and have this feeling that, hey, prices need to go down even further. Sellers, on the other hand, are looking at 2022 pricing thinking, hey, that peak, we need to get back there. Prices need to go back up there. Neither is looking at where prices actually are today. Transactions stall. That is exactly what the sales numbers are reflecting. So I want to reiterate, the cost of waiting is not always going to show up in a spreadsheet. And I love a spreadsheet. Investors, my pro formas, I love a spreadsheet. But if you're a family and you've outgrown your environment and you're pre-approved, that number that you see on the spreadsheet, even if it makes sense, there's something else at play there that's stopping you. Let's get into a few numbers because we always ground in numbers here. Guelph's average for Feb 2026 is sitting at 716,000 overall. That's across all segments, all property types. If you're looking at the detached segments, you're looking at 800K or just slightly above. And if you're going to make a purchase in the detached segment where inventory is tighter, you're really specific on the neighborhood you want to hit, trust that there are other buyers who are that prepared as well. Quickly touching on Milton, average overall price is sitting almost at $1 million, so 970,000. That's down 7% from Feb 2025, okay, overall. The average sale price across both those markets, both those regions, is sitting lower by 6% lower when compared to March 2025. Now here is where I really need you to pay attention because this is where these two markets diverge in terms of what they offer for buyers. In Guelph, I mentioned the detached segment is sitting at 800,000 and it's actually relatively competitive there. With only 180 detached listings and steady demand for families, the absorption rate on detached is much tighter than the rest of Guelph. If you are looking for a detached home in Guelph, I want to make sure that you get this. You are not in a deep buyer's market. You are in a balanced to a competitive market. In that segment, opportunity in Guelph lies in the condo and the townhouse segment. If you are a first-time homebuyer or a downsizer, start shopping in this segment where negotiation leverage is highest right now. Now, Milton, in comparison, is reverse, and this is where they diverge. Opportunity is actually broader as every segment is elevated. This particular segment with you, the Milton townhouse market, is sitting at 156 listings. Sale to list price ratio there is at 98%. Average days on market sitting at 29. But if you look at townhomes, like come in a little bit, like zoom in, the ones that are listed in that 830,000 mark are actually sitting for higher than 30 days on market. Those sellers are negotiable. Sometimes we get caught up in looking at overall averages, and they do serve a purpose, but we also need to zoom in. So for buyers who are sitting on the sidelines, the question really isn't, will the price come down lower? The question is, what is the cost of waiting versus the deal I can negotiate right now? I do want to reiterate, both markets are slow, okay, slow. But the detached segment in Guelph is actually tighter than any headline is going to suggest. And in Milton, a townhome, a freehold townhome, is within grasp, is within reach. If you are waiting for a signal that it is safe to buy, I would argue that the signal is already here.